Good morning, everybody. We're gonna get there. Gonna get there. I had a long day yesterday. We were at the farm for a long time. Don't worry, vlog's coming out hopefully today. Going over what we're working on. I'm still trying to figure out what I'm gonna do about the 3090s. They need to be submerged or something. I can't get them to cool off. So everything's looking good though. Everything's looking good. All right. Let's see here. And we're live. Good morning and welcome everybody to the Crypto Mining Show. Let me fix this camera perspective a tad. I don't know what happened. Is that better? That's better. Yeah. Welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner, which is yours truly. I go by Blind Run on the internet. In real life, the name is Matthew. Hope you guys are having a great day. Today, we're going to be talking about the 3090 Ti and whether or not you should purchase it for mining. Of course, it doesn't look like it, but we'll get into the details and pricing and all of that, availability and so on. Then we're going to be talking about Microstrategy gets 205 million US dollars in collateral loan from Silvergate to buy Bitcoin. We're going to be talking about D.A. Davidson cutting miner Stronghold's target by 40% ahead of earnings. And then my favorite topic for today, which is, can crypto miners make the world greener? An opinion piece from the kind of mining week that is somehow continuing on CoinDesk, but I don't mind it. Pretty awesome stuff. And then, of course, we'll get into cryptocurrency profitability for the week. Does something happen to the camera? I don't know what happened to the camera. I don't know why it doesn't matter. It's fine. We're going to go with it today, okay? I don't know why it's so high. Hold on. It's going to bug me. While we run the ad. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. All right, so I don't normally ask for handouts, but down in the description below, if you've refreshed or just recently joined, I have the 3090 Ti fund. I need a few extra dollars because obviously we have the rent and power and all of that coming in. And I'm trying to do the math. I think we're going to be able to pick one up for Micro Center today. If you guys want to help with that, you can definitely utilize that Bitcoin address down below. Instead of doing super chats or something like that today, that way I have access to it to go ahead and help with the gas money to Houston and of course the 3090 Ti. Never required, always appreciated. I'm just trying to get review sample for the channel. That being said, let's go ahead and hop into today's topics. First and foremost, Caspa. Caspa is getting listed. So this actually happened yesterday and it's pretty interesting. Basically, Caspa is a heavy hash algorithm mineable coin. I've been spec mining it for a while now. They have basically a pretty good community that's been growing, and you can go to caspanet.org for more details. We'll cover that as well. And then in their Discord yesterday, they announced fundraising for a listing on an exchange. Now, this exchange does have API pulls for like CoinMarketCap and so on. So the good news is if you've been spec mining Caspa, we're about to see a listing, and you're about to see it listed on CoinMarketCap, which means it'll no longer be a spec mineable coin in theory, but we have a couple weeks to go here. So let's hop on over. If you can see here, if you want to get information on what it is, Caspa is a proof of work cryptocurrency, which implements the GhostDAG protocol. Unlike traditional blockchains, GhostDAG does not orphan blocks created in parallel, rather allows them to coexist and orders them in consensus. Whereby our blockchain is actually a block DAG, you can see GhostDAG in action in real time here. This generalization of Nakamoto consensus allows for secure operation while maintaining very high block rates and minuscule confirmation times dominated by internet latency. The Caspa implementation includes a lot of cool features and sub-protocols, including reachability to query the DAG's topology, block data pruning, and SPV proofs, and later subnetwork support, which will make future implementation of Layer 2 solutions much easier. It's a community project, completely open source, no central governance, no business model. Thanks Bitcoin, Litecoin, Monero, or think Bitcoin, Litecoin, Monero, Grin, Caspa. The mainnet was openly launched without pre-mining or any pre-allocation of coins. So if you want to get down into the mining and the nitty gritty, the algorithm is Caspa uses a modified version of heavy hash. Heavy hash sandwiches a matrix multiplication step between two standard hashes. The matrix multiplication phase is designed such that it would be efficient to calculate on specifically designed photonic-based devices in the future. The hash was chosen by the community in an open discussion a day before the mainnet has launched. Now, I want you guys to remember, we were talking about Bitcoin and changing, of course, the algorithm to the optical proof of work, OPOW. And essentially what you're looking at, OBTC is already a thing, and it was utilizing heavy hash. So what Caspa is not going to continue to be a CPU or GPU mineable cryptocurrency. What it aims to do is be prepared, of course, for optical proof of work. And that is why they make that very clear within the algorithm. But there is no optical proof of work or machines right now. So you have the opportunity as a miner to get in while you can and go ahead and mine it as with a GPU or CPU or whatever you want. That's kind of the idea behind it. So I wanted to make sure that you guys are aware of that, just because that's super important and relevant, obviously also to the future of the project, which, if we are looking at all the buzz around optical proof of work, should be pretty significant, at least in my humble opinion. It follows the fundamentals as far as no pre-mine, no pre-allocated coins, a no emissions launch, everything's been crowdfunded here for the listing on an exchange as well, which I'm going to show you guys right now. You can see yesterday in the Discord, they say, welcome to our first community funding pool. The proposal behind this pool is to get CAS listed on the crypto exchange txbit.io. TXBit is fully integrated on most important crypto listing pages such as CoinMarketCap, CoinGecko, and portfolio tracking app FTX from Blockfolio. A listing on TXBit would bring us the opportunity to get listed on these crypto pages as well. It would also increase the chances of getting listed on other exchanges. As there's no exchange listing yet, a listing on TXBit.io would also provide a secured environment for buying, selling activities. We got the following offer. It's $2,000 to be paid in stablecoin. They told us that Caspa could be listed within 2 weeks after the payment has been made. Please keep in mind that this is just an estimation. There could always be some unforeseen issues. The goal for this pool has been set at $2,100 US to cover potential fees. If there is some money from the additional $100 left, we would use it to help filing another community funding pool in the future. The duration for this pool is 2 weeks until April 10th. If we miss the necessary cap, everyone would get refunded. Supported currencies is BUSD and USDT. It's BEP20, so Binance Smart Chain. And then they say thanks for your support. And there was the link to the pool. Now, it got funded super quick, right? So this was posted on the 27th. Which was 2 days ago. And then yesterday, basically on the 28th. So within like 24 hours, they met the goal. So hello, Caspers. I'm happy to announce that the community funding pool for the listing on textbit.io has been successfully filed. The payment for the listing is already done. I shared the transaction ID and receiving confirmation from TextBit in the funding pool discussions channel. Thanks to everyone who helped reaching the goal in less than 24 hours. I'll share all minor updates regarding the listings in the funding pool discussions channel as well. The listing itself will be announced through the official announcement channel. So we got about 2 weeks left to mine Caspa without the entire world knowing about Caspa. So that's why I decided we would go ahead and talk about it. Everybody in the channel that's early, you know, if you guys want to start hopping over there in preparation for the listing, remember, with a lot of these spec mining coins and so on, for your earliest profits, it's going to be that initial listing. Of course, there are other larger exchanges you could wait for and so on, or you could wait for it to pump and then see where it settles out and maybe wait for the longer term increase in price. It's really up to you. But this is usually what the spec mining is waiting for, which is this listing, this initial listing, a brand new coin, hot on the market, pop, and you add it into the exchange as soon as you're ready from wherever your wallet is, and you get going. So I've been following this process. So full transparency, I have quite a bit of Caspa at this point. I don't think I'm up there with a lot of the big guys. I don't think I have like millions. I think I have hundreds of thousands at this point. But yeah, so that's Caspa. It's getting listed. I'll have to find another coin to spec mine after this, I suppose. But it's pretty fun stuff. And yeah. All right. So let's go ahead and talk about the 30 series graphics cards. Price is up by, basically Asus is planning to drop GPU prices on their RTX 30 line by 25% starting on the 1st of April. So recently prices for graphics cards such as NVIDIA's GeForce RTX 30 series have started to lower across the board. The price reductions have not been astronomical. Users are still having to pay quite a bit of money to get decent graphics cards. Asus confirmed with the website PC Gamer that the company plans to reduce the price of their graphics cards aggressively. When the price drops have happened before by most companies, the graphics cards are typically less popular cards that are not adequate for today's gamers. One card in question is the 6500 XT. Alas, an Asus representative told the gaming website Asus has been dropping pricing across all the SKUs. Nobody wants the 6500 XT, miners or gamers. It's a terrible card. Asus is officially the first company to lower its GPU prices throughout all lines. This new information is suitable for gamers and pushes the competition to follow suit so that users will also want to purchase their cards. In an official press release, Asus announced that consumers lower prices on their NVIDIA GeForce RTX 30 series graphics cards in the next few months. While there is not much to the release itself, Asus extends the reasoning for the current price reduction plan, citing the end of U.S. tariffs on imports from China. When talking about how the market will be affected by the price reduction, supply chain expert Dr. Thomas Goldsby is quoted stating, "A supplier out there will get nervous that they are sitting on considerable supply for an item that has a limited shelf life with newer cards entering the market, and we will make the move to clear out that excess inventory. Peer suppliers will then have to follow that lead, and back to equilibrium we fall. Recently, there are reports that the RTX 3090 Ti card plans to have a fairly dramatic price cut soon upon launch. The new card would have been higher in cost had the card been released originally in January. But this is a sign of the market finally catching up to the chip shortage. Intel CEO Pat Gelsinger has exclaimed that the worst of the deficit is ending, with gradual increase this year and into the next. This new reduction in price from Asus might signal the end, with the market fully healed from the lack of chips and other devices that have continued to show shortages. Obviously, the GPU shortage has been something that has been compounded and exacerbated by cryptocurrency mining and, of course, the increase in price. What we are seeing, of course, on the cryptocurrency side, at least from the retail consumer purchase of GPUs, is that people are kind of backing off on purchasing GPUs. For example, what I'm seeing in stock pretty regularly is 1660 Supers between $300 and $350 US. Now, while you could maybe go out and purchase the 6600 XT, hopefully for that price, maybe in the future, and potentially get better power to hash rate ratio compared to the 1660 Super, the 1660 Super is going to give you a little bit more longevity, even though it's an older card, at least within cryptocurrency mining, primarily due to the fact that it really does function better on some algorithms, things like Flux, things like Ravencoin, and so on, and it just runs cooler in general. The 1660 Super has been the most reliable GPU in my mining farm, so personally I'm picking them up at the $300 mark just because, hey, like if I have a whole bunch of those, then I don't really have to be replacing pads and all that all the time because, well, there are no pads, and it just keeps on rocking, you know what I mean? Keep on rocking the free world, Bitcoin. Let's go ahead and talk about the 3090 Ti. Basically, here's where you can find it in stock. Links should be down below. NVIDIA launches the RTX 3090 Ti, and here's where to find the stock. They've launched the 3090 Ti with an MSRP of $1999. We found the RTX 3090 Ti stock available in limited quantities in both the US and UK so far, with listings coming in thick and fast, though disappearing just as quickly. If you wanted to get your hands on the BF GPU refresh, below you'll find the retailers to start your search, as well as listings we've been able to verify ourselves. So basically they go through it. They say in terms of the stock that's available now, Newegg is currently selling the 3090 Ti for the Win 3 for $2149, for the Win 3 Ultra for $2199, and they've seen Best Buy list the 3090 Ti Founders Edition on its website, though it's not available for order yet. It says coming soon. And then in the UK, you have the KFA GeForce RTX 3090 Ti EX Gamer Overclock and the Palette GeForce RTX 3090 Ti Game Rock for €1879, as well as the Zotac Amp Extreme Hollow Edition, which I would probably avoid, to be honest, because their 3090 was terrible. So was their 3080 for $1898.99. They do a plastic backplate on this, and it's just, I don't know if this one will have the same backplate, but I wouldn't really want to pick that one up personally. We've seen a few listing from partners already, such as representation from EVGA, Inno3D, and Asus and MSI. You can check for the pre-orders there. Basically, they have the listings in the US at Best Buy, Newegg, and then in the UK, they have it at overclockers.uk and CCL online. Check below. Now, there are some big glaring issues, which is power. So we're starting to get power information and reviews. I haven't watched all the reviews because, frankly, I've been, working essentially, but keeping their tradition alive of launching a new graphics architecture every 2 years. This year, NVIDIA introduced its Ampere GPU. The Ampere GPU is built upon the foundation set by Turing. Termed as its biggest general leap, the NVIDIA Ampere GPUs excel compared to previous generations at everything. blah, blah, blah. Let's get down here. So today we'll be taking a look at the NVIDIA RTX 3090 Ti 24 gigabyte graphics card, a monster of graphics cards featuring the full-fat GA102 GPU. Turing wasn't just any graphics core, it was the graphics core that was to become the foundation of future GPUs. The future is realized now with the next generation consoles going deep in talks about ray tracing and AI-assisted super sampling techniques. NVIDIA had a head start with Turing, and its Ampere generation will only do things infinitely times better. The Ampere GPU does many traditional things that we would expect from a GPU, but at the same time also breaks the barrier when it comes to untraditional GPU operations. So it's pretty much covering, obviously, all the new technologies here. We're really not that interested in it. So let's get down to the 3090 Ti. Here we go. So 3090 Ti, boom. And then the 3090. Now the 30, yeah, right here. Where's the 3090 Ti information? I thought this was going to have it, or did I open the wrong thing? Okay, here we go. At the heart of the NVIDIA GeForce RTX 3090 Ti graphics card lies the GA102 GPU. The GA102 is the flagship gaming GPU and also the fastest gaming GPU that NVIDIA has produced. The GPU is based on Samsung's 8nm custom process node designed specifically for NVIDIA and features a total of 28 billion transistors. It measures 628 millimeters squared, which makes it the second biggest gaming GPU ever produced, right below the Turing TU102 GPU, which powered the 2080 Ti and the Titan RTX. The new shader core on the Ampere architecture is 2.7 times faster. We're already all aware of that. For the GeForce RTX 3090, NVIDIA has enabled a total of 84 SM units on its flagship, which results in the total of 10,752 CUDA cores. This talks about the 3090 having 450 watts. In terms of memory, the 3090 Ti comes packed with 24 gigabytes of memory, and that too, the next generation of GDDR6X design. With Micron's latest and greatest graphics memory dies, the RTX 3090 Ti can deliver GDDR6X memory speeds up to 21 gigabits per second. Now, we did the math out of this because it's not actually, yes, this is the fastest memory currently available, which obviously as GPU miners we're super interested in. However, when we did the math for the total bandwidth, we were only about 10 mega hash a second over, or 10 to 20 mega hash a second over the 3090. So we were talking about 135 mega hash a second at peak. And the problem there, of course, is when we get into power consumption on this particular GPU, plus the cooling problems that you're going to have. Now, I covered in like a little short my least reliable mining rig, and that's the 3090 because primarily of the memory modules on the back of the GPUs, and just running in a farm setting, even if you go ahead and try to do like copper plates and you replace all the pads with the best that you can possibly do, they just don't seem to be able to function at their full hash rate all of the time, unless you kind of got them like separated into their own climate controlled area. They're very frustrating cards to run in a farm, in my humble opinion. For me personally, for the ones I have, I'm actually looking at immersion cooling. We'll be covering that later. But what you see is a total bandwidth of 1000 gigabits per second. The RTX 3090 Ti card is also going to be the first PCIe Gen 5 compliant graphics card, rocking a single 16-pin power connector that can supply up to 600 watts of power to the card. The new connector is rated for 600 watt power delivery, is the Gen 5 compatible and not designed for legacy PCIe Gen 2 or Gen 3 cards. All cards with a PCIe Gen 5 interface will come with 3 8-pin to 1 16-pin connector within the package. The Founders Edition is also going to utilize what seems to be an updated revision of the PG136 PCB board known as the PG136C. As for this feature set, the 3090 Ti 24GB graphics card rocks all the modern NVIDIA feature sets, such as the latest NVENC encoder and NVC DEC decoder. support for the latest APIs, 2nd generation ray tracing cores, 3rd gen tensor cores, and it packs all the modern RTX features such as DLSS, reflex, broadcast, resizable bar, freestyle, Ansel, highlights, shadow play, and G-Sync. And you can see it listed here. I think they have a few different ones popping up. Okay, no, right here. Boom, boom, boom. We covered the memory, which we've covered plenty of times here before. We've already done the predictions. You're looking at 450 watts on the TDP. Now, what I'm hearing in reports here as well is that, hold on, let me see if I can find it, is that we have some of these reporting at up to essentially over 1200 watts of power on some of the third-party boards. So some of these GPUs, and especially in mining, you want to be very careful right now, are coming with dual 16-pin connectors. So basically a total power draw capacity of 1200 watts. And you're not going to want that in a mining rig. You're talking about 6 8-pin connectors for a single GPU. Here, you can see the EVGA GeForce RTX 3090 Ti Kingpin hybrid graphics card rocks dual 16-pin connectors for over 1200 watts of power. I don't think it would be over 1200. The spec would mean it would need to be under 1200, if I understand this correctly. But anyways, compared to the Kingpin, the new Kingpin hybrid rocks a dual-tone black and silver color design, blah, blah, blah. The card features a hybrid cooling design featuring a large fan that cools the pure copper heatsink underneath the shroud alongside a 360 millimeter AIO radiator. Display outputs include the standard triple DVI and single HDMI output. What's interesting is that the PCB shot, which shows a new and updated design with gold traces and new power management system, there's a triple BIOS that should feature normal overclock and LN2 profiles, while Pro-bit support is also included, allowing you to analyze several GPU power metrics at once. The card is going to be extremely power hungry and will require dual 16-pin connectors to boot. This is only the second card to feature the dual 16-pin connectors and will require at least 6 8-pin connectors to adapt to the 16-pin cables. This allows for up to 1275 watts of power to be directed to the card through the actual TGP, though the actual TGP would be closer to 550 watts, and only custom BIOSes will unlock the higher power limit. This should be expected since EVGA is targeting LN2 and serious overclockers with the Beast. And like straight up, if you're going to buy this thing, you better be LN2ing it, because like what else is the point, right? This is absolute insanity. We're talking about basically a power requirement larger than probably 99% of the PC gamer's power supplies total wattage, right? We're talking about 1275 watts with custom BIOS. And you don't want to mine on it, because like, what are you going to do? 136 mega hash a second at 1275 watts? No thanks. This is terrible. This is the worst I've seen. It's so bad. But it's also so amazing. I want one. I'm not going to lie. I want one for sure. The change of PCB also means that existing hydro copper water blocks will not be compatible with the new card, which means users who plan on upgrading the Ti model will have to purchase brand new water blocks. The card is expected to be priced at a very premium over the already outrageous $2,000 US price for the reference model. Now, depending on like how these releases go in each third-party manufacturer, you want to pay very, very, very close attention to how many power connectors are on there. It's not like the 2 8-pin to 3 8-pin difference on the 3090. Even in that case, especially with mining Ethereum or a memory-intensive basically algorithm like Ethereum or something along those lines, you still probably want to get like the dual pin 3090s in some cases. However, there are power delivery issues there too, and they're not as stable, meaning like you'll notice some power throttling. just depending on the model and so on. But you definitely, beyond a shadow, that's only a few, like under 200 watts per 8-pin, right? Like 175 watts or something along those lines. This is a completely different beast, right? Like if you get a second 16-pin connector on there, you're jumping from 600 watts to 1200 watts like that. And no matter what you do, that means like whatever that power connector is running is going to draw that power higher up. Just in general, at least what I've noticed with the like dual 8-pin to the triple 8-pin, like on the 3090s and 3080s. So definitely if you're going to try to mine on one of these, I would avoid dual 16-pin connectors just because you probably don't want to be dealing with also the amount of 8 pins that are going to have to come off to power that thing. So let's talk about that, right? So obviously we asked, should you buy the RTX 3090 Ti for GPU mining? And it's pretty clear that right now, if we're just looking at power consumption, the amount of 8 pins required, and the potential for them, and our estimations on what the hash rate's going to be at, it really doesn't look like you really want to be purchasing this. It's going to be a nightmare to run in a farm, especially because all signs point to the 3090 as far as reliability in a farm setting where maybe you're getting up to like 115 to 120 degrees Fahrenheit, like ambient temperature. It's going to make it really hard to run those unless you're like submerging them. You're going to have more basically power requirements. You're going to have just more connector requirements. This isn't something that I would be purchasing and throwing in a farm. Now, if you're just wanting to have the fastest thing for your gaming PC, hey, I'm all for ePIN. That's great. I have a 3090 Ti. How cool is that? It's the fastest thing. Here's what it does on these different algorithms, and it's so fast. But as soon as you take that and want to throw it in an 8 GPU rig, I'm going, no, let's not do that. I don't think at this point. Now, there are outlying like modifications, like if you're going to just be, like I said, immersing it into like mineral oil or potentially, water blocking it, then we could maybe have a discussion. The amount of money you're going to spend on that, though, your ROI is going to be terrible. At that point, I just say like, just buy like 4 1660 supers or 5 1660 supers for the same price, get around the same hash rate, actually probably a little bit more, and run those things into the dirt in the middle of summer in Texas and have no issues, right? So that's kind of where I'm looking at it for the 3090 Ti. That being said, we do have them in stock at the Houston Micro Center. There's 6 in stock for the EVGA for the Win 3 Black Edition, and there are 12 in stock for the Win 3 Ultra Edition. I am going to see if I can work up the funds to go ahead and purchase them. We're getting towards the end of the month, so funds are tight because this is when we start paying all of our power bills. This is when we start paying all of our rent and all of that. So I'm kind of a little leery about it. I did purchase 2 or 4 more 1660 supers last night too when they dropped it. Like the average price was probably around $340 a pop. I know. It's up to you guys if you want to go ahead and purchase them. Look, I just want to keep expanding the farm, and to me that seems like a good price right now. So I went ahead and purchased them. Let's talk about Microstrategy. Microstrategy unit gets 250 US million, 205. We can look, just pause. We can't do it today. We just need a pause. All right. Microstrategy unit gets 205 million US dollars in collateral loan from Silvergate to buy Bitcoin. The term loan can also be used for general corporate purposes. MicroStrategy, a subsidiary of Microstrategy, has received 205 million US dollars term loan from crypto payment provider Silverbank SI. The loan was given through the Silvergate Exchange Network (SEN) leverage program, which issues US dollar loans using Bitcoin as collateral. The loan was collateralized with about 820 million US dollars worth of Bitcoin, according to a regulatory filing. Shares of Microstrategy were flat during pre-market trading. Microstrategy, a software company, has become known for its embrace of Bitcoin. In the fourth quarter, the company took a nearly $150 million impairment charge on its Bitcoin holdings because of the cryptocurrency's price drop. The interest-only loan is secured by a certain portion of Bitcoin held by Microstrategy's collateral account, which has a custodian agreed upon by both parties. Microstrategy can use the loan to purchase Bitcoin or pay interest and fees related to the loan for Microstrategy's general corporate needs. Launched in 2020, Silvergate's SEN leverage program had $570.5 million US dollars in commitments at the end of last year, according to the press release. Quote, the SEN leverage loan gives us an opportunity to further our position as a leading public company investor in Bitcoin, end quote, Microstrategy's CEO Michael Saylor said in the press release. Quote, using the capital from the loan, we've effectively turned our Bitcoin into productive collateral, which allows us to further execute against our business strategy. Are they even a software company at this point anymore? I feel like they're just a Bitcoin investing company. Anyways, a lot of people do this where they put up the collateral of their cryptocurrency and they borrow against it in US dollars. Some people buy more. A lot of smart contracts are done like this too. You can do it decentralized as well. This doesn't seem to be the case here in this particular situation. But what does it mean? It definitely does mean that, well, the price goes up, right? Because more and more Bitcoin keeps getting purchased. What will be interesting is if someone outside of MicroStrategy and outside of, I guess, Michael Saylor and Elon Musk starts hopping into Bitcoin and really starts making large purchases as well. The special part about Bitcoin here that I think is important to note is that because of the supply cap, the more they accumulate, the more your less amount of Bitcoin is worth, in theory, in the long run. And I just stepped on a screw, I think. But there you go. Let's talk about more mining investing going on too. D.A. David's cuts miner Stronghold's target by 40% of earnings. The stock is still super cheap compared to other mining peers, analysts say. Bitcoin miner Stronghold Digital, SDIG, price target was slashed 40% to $25 on slower than expected operational progress to date and supply chain challenges across the sector. Investment banking firm D.A. Davidson said in a note. Quote, previously our model was heavily based on projections around the IPO, but with slower than expected progress to date and supply chain challenges across the sector, we think it makes sense to be more conservative, end quote, D.A. Davidson analyst Chris Brendler wrote in the note published on Tuesday. D.A. Davidson expects the miner to achieve a hash rate of 6.4 exahash per second for 2022 and 12.6 exahash a second from 2023, down from the previous estimates of 7.4 exahash a second and 14.4 exahash a second. The Wall Street Bank also lowered the miner's revenue and earnings before interest, taxes, depreciation estimates for both years. However, Brendler thinks the stock is still super cheap as Stronghold's waste coal power mining operation will have a cost average over other miners who will see higher power costs due to rising energy prices. Stronghold stock is rated buy and the miner is set to report its fourth quarter earnings on Tuesday's post-market. The shares of the miner have fallen about 66% since it started trading on October 20th, while Bitcoin fell 22% in the same period. The stock fell about 2% early day trading, while most peers were flat. So basically what we're seeing is not even necessarily a reduction in the stock prices for crypto mining companies from the actual cryptocurrency market, but it sounds like to me it's coming from supply chain issues. Now, if you guys aren't aware, right now when you take a look at ASICs and especially Bitcoin ASICs, The ROI on these Bitcoin ASICs are getting drawn further and further and further out. The demand is super high. We're hoping for alleviation from, of course, Intel, which is working on, their own basically BMZ2 chips to go into third-party manufacturer setups. Maybe Block will be making them, so on, to help alleviate some of that, especially on the state side. Now, from what I do understand, we have the tariffs going away on China, if I understood this correctly, timeline, which means that for ASIC miners right now in the immediate future, we could definitely start seeing a reduction in the price by about 25% on the ASIC miners. So be looking out for that, because we're seeing it on the GPU side, and we should start seeing that on the ASIC side, if that is the actual reasoning that we're getting from Asus, like we talked about earlier. So I'd be very, very careful, because a lot of the ASIC companies also, though, are going to be sitting on stock, unfortunately for them, that they've paid a higher price for to get over stateside, and they're going to be trying to sell it for those higher prices. But the fact of the matter is that pricing is just going to come down due to that. Plus, of course, in the future, we're going to have supply alleviation from new players in the field of ASIC mining. That being said, if we look at the markets, right, we are seeing a pretty good increase in, of course, GPU mining, with actually a whole extra, almost going back up to $6 per 100 mega hash at this point. And we are not seeing the same increase in any ASIC mining. That includes Kadena, that includes pretty much everything except for ETH hash. So it's really important to take a look at these and pay attention to them. Plus, with all of the big institutional investors, smaller farms may want to roll that dice on GPU mining over ASIC mining, at least until that pricing on the ASIC mining comes down. Let me know what you guys think. I've been all over the place as far as like, should I be investing into Bitcoin miners? I'm definitely going to be purchasing like 3 more. That's my goal at least. But like I said before, I'm really disappointed with Bitcoin ASIC mining, because an $8,000 investment that isn't mining and has to get RMA'd is way worse than having one GPU on a $8,000 GPU mining rig go down. And then at least you have, 7/8 of your rig still up and running. So it's really hard at the lower level, I think, for those ASICs. If it was a big firm and you have hundreds of ASICs or whatever, and you have one go down, then maybe that's not as bad, right? Let's talk about, can crypto miners make the world greener? And this is actually kind of fun, because we just talked about Stronghold Digital and how they're basically taking care of the coal waste to reduce their power cost. Let's get into this opinion piece and see how it's going. Around 15,000 cryptocurrency mining rigs are humming away at Hive Blockchain's 30 megawatt data center in Boden, Sweden. But not all the time. Sometimes the facility powers down to help the local grid. This is something common that's been happening in Texas as well. So Texas is providing incentives to Bitcoin miners to shut off their rigs. There are even, in some cases, this previous winter that I was informed of, where the Bitcoin miners were actually making more money by turning off their rigs and supplying power back to the grid than they were making on just mining Bitcoin. This is actually a pretty fascinating kind of, portion of cryptocurrency mining, especially from a business perspective, because essentially what it turns into, which is really interesting, is that it turns into almost like a battery. So you have, let's say, basically you have a power grid that kind of produces a certain amount of power, and demand goes up and down for that power. Well, that's because either basically the people within that community have certain peak times of power usage, and over seasons, depending on like how many people are running their heater or their air conditioning, they'll have peak times there. That's why you may see like your electric company request that you install a smart thermostat that they have control over, so that they can basically turn down your power consumption at any given time. The way Bitcoin mining really resolves this is that essentially for the power company, they have a whole bunch of wasted energy just prepared and waiting for that spike in power consumption, right? So there's basically just a ton of wasted energy. Who can use energy 24/7? Well, Bitcoin miners can utilize energy 24/7. So the power companies can work with the Bitcoin miners to basically keep that usage up on the low demand times, and they request that they shut them off during high demand times to provide power back to the network and accommodate that high power consumption point in time. This actually does mean that you're wasting less energy, which in theory, as far as I see it, means that you are basically greener than if you were just providing all that energy waiting for the high load times. At least you are not wasting all of the potential. So it's kind of interesting the way this is playing out. The data center drawing cheap energy from the local hydropower producers acts as one of the largest, if not the largest, active energy reserves the Swedish grid can call upon whenever there are major disturbances to the local power supply. The facility can shut down its machines almost instantaneously so that energy can quickly be diverted to public use. Quote, in 5 seconds, we have to power down half of what we have allowed into the system, end quote, said Johanna Thornblad, Hive Blockchain's Sweden country president. Quote, and within 30 seconds, the entire power supply that is being requested has to be participating in the FCR-D system, end quote, the frequency containment reserve for disturbances that keeps the lights on in the region. When managed like that, the energy demand of Hive's mine is an asset to the local electricity grid. The miners are a stable source of cash flow when public energy consumption is low, but can power off during peak hours. The mutually beneficial relationship between the Hive facility and the local grid shows another side to the well-worn story of crypto mining's environmental consequences. A popular narrative among politicians, media, and the industry's most vocal critics is that mining is cooking the earth. Miners have indeed been known to bring fossil fuel plants back from the twilight zone, thanks to their insatiable and indiscriminate thirst for cheap power. Bitcoin is therefore said to be gobbling up the world's precious energy and consequently responsible for large amount of carbon emissions. Quote, you cannot waste energy sustainably, end quote, Pete Housen, a senior lecturer in the Geography and Environmental Sciences Department at the UK's Northumbria University, I probably said that wrong, told CoinDesk, aptly summarizing the critic's view. Globally, Bitcoin mining alone consumes 136 terawatt hours per year. Estimates the Cambridge University Center for Alternative Finance. That's about the same amount of electricity as Argentina, the United Arab Emirates, or Sweden. But that's only about half of what data centers run for other purposes consume, which the International Energy Agency, IEA, puts at 200 to 250 terawatt hours. And this is what I've been saying about proof of stake that a lot of people are not getting, that you need to understand. Proof of stake requires that you're up 24/7. Because of that, you're most likely going to go with one of the big three providers of virtual private servers currently available, which is going to be Amazon, Google, or Microsoft. They are consuming a lot more power in basically hardware that is not being utilized to have basically backups available for your VPS that's staking, right? So essentially the way this works, just to give you guys an idea, this is what I used to do for a living. So you have a data center that has multiple servers in it, and you have something called failover. So at all times you have a piece of hardware that is on and running, consuming power, waiting for your staked virtual private server, your staked basically server on another server to fail and go over to it. Depending on the amount of redundancy, that will create basically the amount of unused hardware that is being utilized there. In cryptocurrency mining, this doesn't happen. because if your rig goes down, you're just going to try to repair it. The cryptocurrency mining hardware, you don't have failover. You're essentially trying to run the machines 24/7. So in a sense, and because of course they aren't what I would call necessarily always the most efficient, they're not efficiency driven at these large companies. They're definitely failover driven. You do have not more of a waste of power, in my humble opinion, than you do in cryptocurrency mining specifically. And that is just due to the way the infrastructure is built, right? It would be like if you had two S19s and you kept both of them running, but you were only making money on one. That's the concept, right? And then if that one failed, it would fail over and start making on the second one while you built up and repaired the other one. And that's just like I'm trying to make it as basic of a concept as possible so you understand. Let me know. Of course, definitely disagree and we can chat about it, but US and European lawmakers have been making arguments such as the ones mentioned above when scrutinizing the environmental impact of Bitcoin mining. Last week, proof of work mining used by the Bitcoin network narrowly escaped its demise in the European Union. Lawmakers voted down a proposal that would have banned proof of work mining, but made allowances for protocols such as Ethereum that were transitioning to other verification methods that consume less electricity, like proof of stake. Concurrently with these criticisms, the Bitcoin mining industry has shifted dramatically towards renewables. Estimates of how much Bitcoin mining is powered by renewables range from 40 to 75%. The New York Times reported in September of 2021. A report by Crypto Asset Management from CoinShares found that as of December of 2021, renewables contributed under 30% of the total energy consumed by the Bitcoin network, with nuclear power responsible for 11% of the total and natural gas contributing another 24%. It's important to understand that natural gas is even more wasteful and actually damaging to the environment if you're not utilizing it. So why is that? Well, basically what happens is that you have pipes that carry the natural gas, right? Well, the amount of pressure in the pipes has to be regulated so that you don't have bursting pipes and so on. So when the natural gas is coming out and being produced, they have essentially what's known as flare gas. What do they do with flare gas? Well, they release this natural gas and burn it off. It's estimated to be about 20% of the entire production of natural gas is burned off in flare gas. What cryptocurrency miners are doing here in Texas is taking that additional 20%, and using it for natural gas generators to power their Bitcoin miners. This way, the natural gas company can not only monetize that natural gas, but you can utilize that there. As far as emissions go, your emissions are probably cleaner from the natural gas generators, and I don't know exactly, but my understanding is it's at least cleaner and you're at least not wasting it when you just burn it off right at the plant. So when we're talking about the environment, when we're talking about efficiency and we're talking about green technologies, we need to account for waste. And what Bitcoin mining is doing and cryptocurrency mining in general is doing is reducing waste, while proof of stake is increasing waste, because once again, we go back to the idea that if you have a server that is basically running your proof of stake node, if it goes down, there always has to be another server that's being wasted and just utilizing energy without doing anything, waiting for your server to fail over to it. Okay? So waste is an important argument when we're discussing this. What Bitcoin mining has been doing is proving that it can suck up the energy waste. That is what's been happening. So just because natural gas isn't necessarily the cleanest or renewable energy in general, it's better than wasting 20% and burning it off and damaging the environment anyways. Although carbon emissions from mining have been growing overall with the industry, they have decreased relative to megawatt hours of electricity used and terahashes of computing power produced, CoinShares found. More than cleaning up its own act in the process of decarbonization, the crypto industry might help energy producers build more renewable energy that the rest of society can use. For many miners, using renewable sourced electricity makes a lot of economic sense. Overall, renewable energy is cheaper than fossil fuels, so it can preserve miners' profit margins. Quote, generally speaking, electricity from renewables is as competitive, if not cheaper, than fossil fuel-based electricity, end quote, said Jesse Morris, CEO of EnergyWeb, a U.S. company that is helping a consortium of miners build transparency around their energy sources, known as the Crypto Climate Accord. Not only are fossil fuels more expensive, but they are vulnerable to external price shocks such as the war in Ukraine. An interesting dynamic emerging from the conflict is that with fossil fuel prices through the roof, renewable energy is often more attractive, said Mellerud. Quote, we will likely see more miners moving towards renewables due to this shock. Housen, who studies the social and environmental impact of Bitcoin mining, is skeptical of such arguments. The fact that renewable energy is not produced 24/7, 365 days a year makes it less attractive to miners, he said. Quote, every minute the sun's not shining or wind's not blowing or it's dry season, so no hydro, they're losing money, end quote, he told CoinDesk. Miners have another incentive to move toward cleaner energy sources. They can, quote, lower their cost of capital since they have better chance of attracting institutional investors that operate under ESG mandates, end quote, said Jaron, researcher at Oslo-based Arcane Research. Quote, environmental, social, and governance, end quote, is a set of criteria for making investments that looks at social goals in addition to financial returns. Companies, especially those traded on public markets, are under pressure to decarbonize, said John Belizaire, CEO of Soluna. As miners went public, their energy consumption became public information. And as you might imagine, no company, especially in the public market, is immune to ESG pressures. We are all in the role at this point in the back of a Tesla moving in the right direction, end quote. And that's a fair point because you are incentivized as a miner to move towards renewables right now. Once again, if you want to move to renewables as a country or as a society, you don't want to put in negative rules that impact people poorly. What you want to do is put in incentives for the behavior that you basically want. So you put in the incentives for the renewables and naturally people will follow over in that direction. And because the largest basically expense of any miner is going to be power, all you really have to do is place that incentive accordingly and the miners will naturally gravitate towards it, right? If a miner intending to be green joins the industry, fossil fuel-powered miners, such as players using coal in Kazakhstan or gas-powered ones in Texas, are incentivized to increase their energy consumption to keep up, Housen said. A growing way of using renewable energy to power mining is through what can be called behind-the-meter solutions. That's when an electricity producer connects a couple or a couple thousand mining rigs close to an energy asset, so the power goes directly to the miners instead of going through the grid and its meters. A fair amount of the world's renewable energy is stranded or curtailed, meaning it is located far from demand and there's no good way to transmit it to regions with high usage. As a result, producers might turn off or limit their energy production. California clocked 1.5 terawatt hours of curtailed energy from wind and solar in 2021, according to the state's grid operator. In addition, a lot of energy dissipates when it is transmitted over long distances, so it makes economic sense to consume it where it is produced, said Proof of Work Energy co-founder Alejandro de la Torre, whose company, Crypto, builds and mines, around Europe. For example, in northern Norway, electricity prices are about 10 times less than the southern part of the country because there is an abundant hydroelectric power, but barely any industry or population to consume it. Quote, the energy production in the north and the potential for the most production is so much higher than the local demand for the energy and the capacity to export it to other areas, end quote. Peterson, CEO of Oslo-based miner CryptoVault, told CoinDesk. However, countries around the world are working to develop better transmission lines such that energy can be consumed or exported. Germany will spend $55 billion on such projects by the end of 2030, estimates the Federal Ministry of Economic Affairs and Climate Action. Thanks to the abundant hydroelectric energy, northern Norway, which is not directly connected to the rest of Europe, has been impervious to sharp uptick in energy prices in the south of the country and doesn't expect any increase soon, said Oleg Blinkov, head of data center development and operations at Bitfury, one of Europe's largest miners. CryptoVault is considering establishing facilities there to soak up the excess energy. The same is true for northern Sweden, where cheap, abundant energy has attracted everything from Facebook data centers to crypto mining operations to the region. Bitcoin mining can act as a demand-side response to the problem of curtailed or stranded energy. The grid is having a real challenge integrating large amounts of power, Belizaire said. Three things are needed to fix this problem: transmission capacity, flexible loads, and energy storage, he said. The IEA estimates that another 500 gigawatts of demand responses need to be brought online by 2030 to achieve net zero carbon emissions globally by 2050. That's a tenfold increase compared to the capacity of demand-side response brought online in 2020. Demand responses try to balance the grid by reducing energy consumption to match the supply. The next decade will be messy, Morris said. Power grids will become increasingly complicated as they integrate growing array of energy sources. Quote, "It's going to get worse before it gets better," end quote, he said, adding that crypto mining should be a necessary part of the solutions available to energy suppliers. Housen countered that overall mining is encouraging fossil fuel energy production more than it is promoting renewable energy. All right, so for every farmer plugging in a few ASICs into their biodigester, there's an entire fossil fuel power plant reopening to satisfy Bitcoin's energy demands, he said. Trade groups who tout the former type of miner are simply engaging in, quote, "a massive greenwashing drive," end quote, he said. Ultimately, the industry is delaying grid transitions to renewables by making oil and gas industries more profitable, Housen said. Increasing the proportion of wind and solar energy in the grid will increase the need for energy reserves that can be tapped on demand, like Hive's Bowden mine that can power on and off, Mellerud said. Quote, "These energy sources are variable and not controllable as they only generate power when the weather allows it," he said. In other words, the supply of energy becomes less flexible the more wind and solar is integrated into the grid, such that the demand side has to make up for the difference. Another interesting model is that manufacturing facilities such as clothing factories can use any excess energy that they didn't spend during the manufacturing process to power in-house Bitcoin miners, De La Torre said. This is happening, for example, in Spain, he said. For Erik Theden, the Swedish financial regulator who called for a ban on proof-of-work mining in the European Union, miners are using electricity that would otherwise be available for other industries. Quote, "This energy is urgently required for the development of fossil-free steel, large-scale battery manufacturing, and the electrification of our transport sector," end quote, he wrote in November. Indra Overland, head of the energy program at the Norwegian Institute of International Affairs, agrees with his standpoint, adding that even if miners used energy in places where there is an abundance of it, they would still be competing against other industries also looking to take advantage of cheap renewables. Quote, "The energy transition requires a reorganization of many sectors," end quote, Overland said in an email to CoinDesk in February. This process is already going and will accelerate in the coming years. Many energy-intensive industries will move to locations where there is abundant clean energy. Clogging up the locations with cryptocurrency mining will slow down this process. The unique nature of miners' energy consumption profile is so good for soaking up curtailed energy that it is hard for other industries to compete, said SAI Tech CEO Arthur Lee, whose firm develops technology to make mines more efficient and green. Clean energy stations are mostly built in remote places which attract energy consumers who have mobility and huge power demand. Miners fit into this profile perfectly. These unique characteristics are advantages for energy producers looking to balance their grid loads, said Andrew Weber, founder and CEO of Digital Power Optimization, which helps energy producers balance their load and maximize profits using a host of solutions. It doesn't require high latency internet connections, which might not be available at remote edges of the world where renewable power plants are, and also doesn't need to be running at all times, unlike other types of consumer data centers, he said. Exactly, which once again, we go back to proof of stake, proof of work. And because you're going to be going into data centers like Amazon and Google, they have requirements of 24/7 uptime. They have basically additional servers running. This was the point that I was talking about earlier, and they're getting into it now. If Amazon or Google plop down and build a data center and buy power from a power producer, first of all, they want the power 24/7, he said. They never want to shut off because Instagram photos, web applications, and the CIA's data is there on their servers, and they need that data to be up 24/7. They can't have glitches, they can't have downtime. Automating the process through which mines turn on and off is key to balancing the grid because it allows adjustments without delays caused by human error, maximizing the benefit to consumers, said Greg Dixon, CEO of Voltus, a firm that digitally aggregates power suppliers and consumers into one virtual system to more efficiently balance loads. According to Henrik Julin, head of power management at Vattenfall, one of Sweden's largest state-owned power companies and a major energy supplier to the Hive facility in Boden, flexible electricity use is an effective way to support stable frequency in the power grid. Julin added that Hive Bikupa data center is one of Sweden's largest contributors to FCR. The Swedish national grid operator can call on the Hive data center in Boden to power down a portion of its mining operations at least once a month to balance the local grid. In the facility, energy use is divided into thousands of small units or machines that can be powered off one by one or all at once, according to Marin Baksa, site manager at the Hive blockchain data center in Boden. By comparison, a steel factory, which has to maintain certain temperatures and an assembly line, might have a harder time powering off quickly, Baksa added. Quick responses, like the ones automated crypto mines can bring, are valued higher than slower ones, Dixon said. Bitcoin miners are willing to curtail their activity for about 100 hours per year, which is when the value of curtailing exceeds the value of mining, i.e. when it's more profitable to give power to the grid than to use it for mining, Dixon said. This was what I was also referring to earlier as well. These can be days when there is really high demand, for example, due to a heat wave. The miners can use excess renewable energy locally to speed up the rate of return on investment and attract more clean power investors, Lee wrote in an email. Storing electricity instead of using it for mining comes with several caveats, not least of which is the battery technology that has been infamously static for the past few years. In south of Spain, energy producers are not getting very much out of selling electricity to the grid, said Vincent Burke, CEO of Solar in Spain, which develops small-scale photovoltaic installations. Burke said that for every 3 units of electricity he sends the grid, he receives 1 credit. Quote, so the value of that kilowatt becomes a third of what it is if you use it, end quote, he said. Adding that storing extra electricity in a battery is usually expensive because lithium, which is a key material in batteries, is pricey. Quote, if you don't use the energy that is produced, then you need to store it somewhere, Hive's told data center. But when you create batteries, after the period of expiration of the battery, you create a lot of waste. So not sure that anyone is going in that direction, he said. The pros and cons of crypto mining and batteries are different, Weber said. For energy producers, batteries capture the difference in value between the low and high price. You charge them up when the price of power is low, and then you discharge your batteries when the price of power is high. So what you capture is the spread between those two prices, he explained. This is important, guys. By contrast with crypto mining, what you want is more or less consistent low power. Ideally, you have a really low power all day long and all night long, Weber said. So where someone places a battery might be the same place a crypto mine, place for a crypto mine, but maybe not, he said. Belazaire said mines are in a sense, better than batteries because they add load instantaneously that can be directly converted into a different asset. A battery absorbs the electrons and then has to re-output the electrons to the same point where it's connected. It can only do that during certain periods, and sometimes those periods for its business model don't conflict with what the grid needs, end quote, he said. Housen scoffs at such comparisons. The idea that Bitcoin will function like a battery in that miners can act as a buyer of last resort, converting and storing the electricity as financial energy, is absolute bollocks, he said. I disagree, but all right. So the crypto mining merger, the incentives between energy producers and miners are so aligned that soon it might be difficult to draw a line between the two. More energy firms entering mining while miners are accumulating their own energy supply. Voltus has created models to determine exactly how much flexibility is worth to crypto miners. In Texas, 37.53 per megawatt hour, whereas New England is $6.69 per megawatt hour. Doesn't seem right. Okay, hold on. Anyways, let's go. Energy companies that stay out of Bitcoin mining will leave money on the table because mining most of the time is much more profitable than selling energy to the grid, he said. Based on his research during mining's super profitable 2021, energy producers could have earned more than 10 times the cash flow by mining Bitcoin than selling their energy to the grid, he said. Darrow Ruiz, who installs photovoltaics with solar in Spain, said that although energy prices have increased to 14 cents per kilowatt hour for consumers due to the conflict in Ukraine, producers are still paying around 5 to 6 cents per kilowatt hour. DPO's Weber said that in 5 to 10 years, all big crypto mines will have to generate their own power generation capacity to maintain cost-competitive operations. Quote, if they don't, the people that own the power gen can do this, he said. Belizaire agreed broadly, but stopped short of saying that miners that don't supply their own power would eventually be priced out. Quote, as the industry scales and the approach and model starts to take off, it's likely that vertical integration of renewables in this industry will be an important strategic advantage. The materials used to build mines are also contributing to the industry's carbon footprint. Several miners, which are auditing their carbon footprint, are looking comprehensively at their operations, even as they focus on energy consumption, Morris said. And some are finding ways to save energy in their data center designs, software systems, and contracting and financial structuring. Morris added that most of the criticism of Bitcoin's carbon footprint has veiled a way of saying, I don't believe in Bitcoin. Decarbonizing the network might not actually satisfy these critics, he said, and that's a fair point. Asked whether a fully renewable energy-powered Bitcoin mining network would be acceptable in terms of its carbon footprint, Northumbria University's Howson, a critic of the industry, said that proof of work is proof of waste, and that if the world's Bitcoiners got together and agreed to cooperate to make Bitcoin green, it would negate the point of proof of work. I don't know. All right, let's continue on. Sweden's Theden started his letter calling for a ban on proof of work mining, saying the social benefit of crypto assets is questionable. For the regulator, the energy going to mining could be better used elsewhere. Theden cited research by Digiconomist, a project by Dutch researcher Alex de Vries, we got this, who has been a strong advocate against Bitcoin mining. Among other topics, he has quantified the carbon footprint of Bitcoin transactions by comparing the energy intensity and carbon emissions of Bitcoin and a Visa transaction. He found that Bitcoin's carbon footprint per transaction is equivalent to 2,700,562 Visa transactions. This is something I heard too. And I do have a counter to that. But let's see what they say. The Bitcoin community has objected to the comparison and questioned de Vries' background. Researchers at Cambridge University Center for Alternative Finance say that the energy cost per transaction metric is, quote, a purely theoretical measure that has little practical relevance without additional context, end quote. Critics also point out that the researcher works for the Netherlands Central Bank, which they consider a conflict of interest. Fair enough. Bitcoin supporters, like many of the miners quoted in this article, disagree. Mellard thinks that the debate overall focuses too much on the cost of Bitcoin and that the network has other benefits. Quote, yes, Bitcoin consumes a lot of energy, end quote, but this is the price we pay for having a global, permissionless, and censorship-resistant monetary system, he said. So there you go. Now, on the point of amount of transactions per two, you would have to start calculating like every block of every Bitcoin, Bitcoin block being completely full. And I think that definitely changes the numbers here too. What he was comparing it to was, I guess, the average. And then if you're including the average of like when there's not a lot of activity, then we're kind of at a moot point. Let's go ahead and get into mining profitability. We are running way over today. Basically, I was down for an hour. I am calling my ISP and making sure that they get my Wi-Fi backup in. That did hurt us on the last 24-hour profitability. We're at 0.07, which is 241 US dollars. Our projected for the next 24 hours, 0.081 at $276.99. You'll notice that my hash rate has gone up. We're at 5.51. Our average hash rate, though, unfortunately, was the 4.20 because of this downtime. We were at an average of 4.8 as of yesterday. We were at the farm for about 4 or 5 hours fixing some stuff, and there'll be a vlog for that coming out later today, so stay tuned on the channel for that. Overall, mining profitability is looking much better, but we haven't really seen any increase since yesterday, or have we? Let's talk about that too. I am mining Flux solo, and I probably should not be because we're 3 or 4 days in and have not found a block, so screw that. And then Varus, we are at basically just still making that 1.2. I have a 3600 XTF to get back online. If we take a look at what to mine and we calculate this out, what we have here is basically it looks like we have a drop in profitability on what to mine. So actually this morning was showing like 560 or something like that. Now it's showing 490 on ETH hash, showing 487 on Ethereum. Ethereum Classic is $3.76 a day after power, and Flux is $3.60 a day after power. Have to scroll down pretty far to get to Ravencoin at $2.81 a day after power, and even further for Ergo at $2.62 a day after power. Is there a correlation in increase in hash rate? We're at 215 exahash a second on Bitcoin, so no real changes there. If we take a look at Ethereum, we're still right at that 1 petahash a second. If we take a look at Flux, we're at 1.9 mega solutions a second, so no changes. If we take a look at Ethereum Classic, come on. We are at 28.55 terahash a second. Looks like it has dropped a little bit. If we look at Ravencoin, we are at 3.76 terahash a second. And then if we look at Ergo, it's about 15.5 terahash a second. And we already talked about that pump and dump there, kind of in mining power. Mining pool profitability on Ethereum, last 90 days, the Flex pool in first, mining pool hub in second, ZET in third. Last 60 days, ZET in first, Flex pool in second, mining pool hub in third. Last 30 days, ZET in first, Flex pool in second, nano pool in third. Last 21 days, ZET in first, Flex pool in second, 2 miners in third. Last 14 days, ZET in first, nano pool in second, Flex pool in third. Last 7 days, ZET in first, Flex pool in second, Ether mine in third. Last 3 days, ZET in first, nano pool in second, Flex pool in third. For the last day, ZET in first, nano pool in second, Flex pool in third. We were already talking about ASIC mining profitability being down today. The cold shell KD6, which is usually top dog, is down to 127.79 after power, and that is coming in under the Silicon A11, which is an ET hash based miner. KD5 has also dropped down to 86.83 a day, and it continues to drop across the board through the Z15 and so on. The D7 And then if we look at the S19 Pro, it's slightly up to $20 a day if you were going to go ahead and mine Digibyte right now. And then if we look at the markets for the 24 hours, let's go ahead and see Filecoin is still pumping at 10%. Ethereum Classic is still pumping. It's almost there to that $50 mark. It's up another 4.21%. So really, you're looking at Ethereum Classic continuing to perform well. Ethereum's up 2% as far as mineable coins. And then Monero is up 1% as far as mineable coins. Let's look at the 7-day gains. Zilliqa still at that huge 123%. You can dual mine that, keeping in mind, of course, when you're mining Zilliqa, you're not mining ETH and it bounces back and forth. The dual mining is a little unique in that form. Scrolling down from there, let's see if we have a lot of these are not mineable. We're just looking for the mineable ones. Feel like we missed one, but Classic over the past 7 days, about 17% up as well. There you go. There you go. Bitcoin miners on sale. You have the Gold Shell KD box at $7,000. It is the new 2022 version. That's 2.6 terahash a second. You can purchase that on BT Miners by using the affiliate link down in the description below. S19 Pro is still at $9,900 US. The S17 73 terahash Bitcoin miner is at $4,550, and the Gold Shell X5 850 mega hash a second Litecoin Dogecoin miner is at $2,000 US. And then I think that's pretty much it. These are gone up in price on the M21S from $3,400 to $3,800, unfortunately. And that's kind of where we're at. I don't really have time for questions and answers today. Unfortunately, because it's already 11:15 and I'm going to be trying to get to the gym, enroll, and then I'm going to see if I can make it to Houston. Really, Houston's going to be about, if I can afford a 3090 Ti. Which I really wish it wasn't so close to the first of the month. I don't think I can afford a 3090 Ti. So I'm going to go roll. Thanks for hanging out, guys. Be sure to hit the like, comment, subscribe down below. Hit the notification bell. I'm going to go do some jiu-jitsu. You guys have a great day. I'll see you next Tuesday.